Hi, I'm Pattu from freefincal, and what a day it's been at the markets. And as I make this video, the S&P 500 is again down by a big amount, I think. And so it's going to be tough times. It's going to be troubling times, and it's going to be an experience of a lifetime for all of us, I think. Let's just hope and pray. First of all, this virus is contained and the new cases start to decrease. It's already happening in China, I think, but it needs to happen in other countries as well. Let's just pray for the best. In India, it's just starting up, so it's going to take some time and then it's going to plateau. Let's hope for the best. While the fall in the markets is triggered by unfortunate circumstances, there's one thing that has happened which is, in a sense, hopefully positive for all of us, and that is the homogenization of all market segments. It's gradually happening. It's not happened fully, but it's gradually happening. And I wrote this post in the middle of the market day today, so things have changed a little bit at the after closing. But again, it doesn't matter. The main results are the same. So as on 11th March 2020, that's yesterday. I have not updated the today's closing. The Nifty 50 had fallen 14% from 1st January 2020, and it's almost now, I think, 20% down. If you take into account today's closing, it will be 20% down. So it's technically a crash. We are into a crash territory because many people define it as a 20% fall. Nifty mid cap has only fallen about 8%, and Nifty small cap is only fallen about 9.33%. So this is the graph you can see. Let me get here first. That's the graph you can see here. That's the Nifty from January 1st January 2020. The blue line at the bottom. The red line is the Nifty small cap, and the green line is the Nifty mid cap 150. So we have a very rare instance where the large cap indices have fallen more than the mid cap and small cap indices, and even among the 50 stocks, if you compare the Nifty 50 equal weight index, it's not fallen too much. This is, of course, yesterday's closing. Today's closing, it should have fallen down much more. And the Nifty 50 has fallen significantly down comparatively. You may remember that after the budget of 2018, the mid cap and small cap segments started correcting, and the Nifty and the Sensex did not correct. They actually moved up, and this up movement was caused just by a few handful of stocks at the top of the Nifty in terms of portfolio weight. And I had also showed you that few months, maybe not few months, few weeks ago in December, mid of December 2019, I showed you that the difference between Nifty 50 and Nifty 50 equal weight index has gone down to an all-time low. The difference was the highest so far. So the inhomogeneity within the Nifty stocks was the highest we have known so far. And this inhomogeneity, where a few stocks have moved up and the bottom other stocks, especially the bottom, have not moved up, that inhomogeneity is starting to correct. Already there is a significant downturn. I think more correction is necessary. That's going to happen now. Although the triggered by unfortunate situation, but the market is becoming homogeneous. So from that point of view, it is healthy for everybody in the long term. We have to look carefully at how actively managed large cap funds perform when the Nifty has become more or less homogeneous, when all the stocks are moving up or down together, instead of this inhomogeneity that existed between January end 2018 to now January 2020. I think this homogeneity has, in my opinion, has stopped, and it's reverting to a slightly more acceptable, more nicer situation where we can understand what's happening instead of just a few stocks determining the fate of the market. But it is going to be a tough time. I think we are filled with messages say, don't panic, don't panic, don't panic. I mean, if everybody says don't panic, then I think it's natural to panic. I don't know what to say. We have to be scared about this. This is a very scary situation. This is a very dangerous situation. The world economy will be hurt. Every economy will be hurt in every country. Every kind of economy will be hurt because of this for months and months. It's going to take some time to recover. We have to wait. We have to be patient. if you have more money to invest, some extra cash to invest it. Don't worry about should I wait now, don't catch a falling knife, who cares? I mean, just invest, don't worry about all that, just invest. You have to take risk. If you're scared, pull out. I mean, I can't say, I'm not some distributor say don't stop your SIP, don't pull out. I don't care. If you're scared, pull out. But one thing is to be understood. For in equity, if you want to make money, and equity is a very nice way for a person in the middle class to change their lifestyle from middle class to upper middle class. More than that, if you want to do that, then you must pull through these hard times. You must stay invested. You must invest more money if possible. That is the only way to handle this. Of course, your goal should be several years away. As long as that is acceptable and that you have a plan and so on, you have a goal and so on, then it's fine. But without taking risk, you can't expect any kind of reward. And this is how equity will test you. People are saying it will recover, and so on. Yes, it will recover, but we don't know when it will recover. It may take days, it may take weeks, it may take years, and that will kill the returns. But you have to go through this grind. You have to wait patiently. Unless you wait patiently, you cannot get wealth from equity. That much is clear. But personally, I am worried. I have a lot of money invested in the market, and I think I'm posted in Asana Ideas Wealth. I have lost more money from February 28th than the entire net worth I had in 2012. I've lost almost double of it. I should have lost more than double of my net worth in 2012 in equity. How much ever money I had in equity in 2012, I must have lost more than twice of that since February 28th, 2020. But you have to go through it. My goals are far away. I don't need the money now. For my child's education, I have 60% of it. I had 60% of it in equity, but I told you several times, I have 40% of it in debt, but that 40% of it in debt is enough. Even if my child enters college today, he's only in the fourth standard. So that's how you mitigate risk. So you should be. That's how I can be comfortable with 60% in debt for both goals. They are far away, hopefully. So you have to mitigate risk in a personalized way. Then only you can handle this market crash. I don't want you to say. I don't want to say stay calm. Don't panic. You have to be worried. I am worried personally, but don't do silly things. Have a plan and stick to it. Please remember one more time, unless you take the risk, you cannot make money in equity. You have to take the risk, but do it in a calculated manner. Don't just go head in without any plan. So this is going to homogenize the market, I think. Let's hope something good will come out of that. Let's find out about this. Let's hope for the best and pray that we have a cure and we have a plateauing of the virus, and then it's decaying soon. Bye bye.